President-elect Donald Trump set to retake office in a few weeks. Joining us now to break down what to expect within the commodities under the new regime is Robert Minter, Abrdn Director of ETF Investment Strategy, joining us here in studio. Good to talk to you today. Let me just sort of give you the stage as you look to this new administration, Trump 2.0. The thinking is, and we were talking about this morning, could be bullish for oil, potentially, if you go with the rhetoric. Where's the reality stand right now, and how are you looking from an investment case?
Sure. So drill, baby, drill is the short term for this. But baby's all grown up, and what worked in the first Trump administration might not work this time. And the big driver is a large portion of oil supply in the U.S. is driven by private oil companies, and in Trump's first administration, they were actually paid more to produce more, regardless of the profit. That ended towards the end of his first term. So it takes prices and profit to drive more production at this point. And so we might not see just as bullish of a supply increase as people are thinking.
And so, Robert, so if I look at Brent here, we're at 73, 76, you see it headed where over the next 12 months? 70
to 85, because around 85, you start to hamper OPEC's best customer, which is the emerging markets, if there's a strong dollar. They can't handle both a strong dollar and really high oil prices. It will hurt their economy and bring demand back down. And there's plenty of extra supply in OPEC. They're just voluntarily curtailing it to keep the price higher.
Yeah, let's expand on that a bit, specifically on the Greenback and how much higher it's likely to go. Obviously, as you said, would have a huge impact in commodities, specifically looking at oil as well, but more broadly. Where does your thesis take you in terms of how much higher it can go?
So what's really interesting on that front to us is, we have a president-elect likes a lot of attention on himself, and so we sort of view these issues we're having here as very localized and very unique to him. And I keep thinking back to the G7 family picture, as it was called in last June. And of the 7 countries, 3 of the leaders are already gone out of power, or almost out of power. Germany's Scholz is going to have a surprise election in February, a short election in February. That's only the second time since the end of World War II that's happened. And both Canada and France their leaders have really high disapproval rates. And so we're starting to see people want a leader that can actually have an effect on their pocketbook, on their wallets and their pocketbooks. Because the populations are being bifurcated into people who hold a lot of financial assets and have benefited from the tremendous stimulus from COVID and the global financial crisis. And then the other half, which the pay hasn't really kept up with the cost of living, and that's creating a lot of stress, and you're seeing that in the voting booth and other places around the world.
Let me ask you, we were talking oil. I want to get your thoughts on gold as well, because bullion said that it's been a strong year. It's on track to be up about 30% in 2024, but I'm curious what you see playing out kind of near intermediate term ahead.
Sure, this is probably the most boring bullish story. This story hasn't changed for 3 years. ETF investors selling gold hand over fist. The reason why the price is up, central banks are buying between 2 and 3 times the amount of gold the ETF investors are selling. And the reason they're buying the gold is to buffer, is to add more gold to their FX reserves as a buffer against the US dollar. And it's not specific to Trump. Presidents Bush, Obama, Trump, and Biden all used the US dollar as a lever to make foreign policy changes. And so they've taken notice. They're buying more gold. And they're holding less dollars and treasuries. Now, those 2 markets are so large, it's marginal effect on them. But for gold, it can have a big effect, obviously.
I want to get back to that last point you made about the leadership shakeups that we are seeing globally, because you said that shakes up the investment case as well. Obviously, a lot of uncertainty coming in from that. What does that mean in terms of money that flows into commodities?
So if you think about that, the purpose of the G7 is for security in terms of trade. If we are in a marginally less globalization regime, that means we're going to go from expanding supply chains and having a lower and so a disinflationary bias towards the opposite. Friendshoring, only buying supplies from our friends, and that limits the availability and should raise the price.
Robert, great to see you on set. Thanks for your time and insights.
Thank you.
Appreciate it.